Welcome back, folks, to Investor Diaries. By now, all of you would have heard about the AMD-Xilinx merger deal, but what if we were to tell you that there is a certain inefficiency in the market as a result of this merger? We'll tell you all about this inefficiency and how you can benefit in today's video.
Alright, so a little overview about the merger. AMD entered into a definitive agreement with Xilinx in October of 2020. And this was to acquire the semiconductor company Xilinx in a $35 billion all-stock transaction.
Now, this transaction is set to bring together two companies with complementary product portfolios and immediately grow AMD's margins and cash flow. AMD also hopes to save $300 million in the first 18 months following the business combination due to various cost synergies after the transaction.
Additionally, the exchange terms called for Xilinx shareholders to receive 1.7234 shares of AMD common stock for each stock of Xilinx common stock. In fact, the deal terms guarantee that AMD shareholders will own 74% of the combined entity after the transaction is completed. AMD and Xilinx shareholders overwhelmingly approved of the merger way back in April.
So now, Appy, let's look a little more about the opportunity that is there that presents itself for all of us retail investors. So in August, an article appeared in Barron's that mentioned this arbitrage in the AMD share price versus Xilinx share prices. This arbitrage is caused due to inefficiencies in the market as the deal progresses and as the uncertainty in the deal builds up as we progress.
Alright, so Nitish, let's actually do some numbers here and try to crunch numbers so that investors can actually understand where this inefficiency actually lies. So,
and how the investors can gain. What is the percentage of amount that the investors can gain as well?
Absolutely. So an average investor, let's say, invests $1,500 US in Xilinx stocks.
Right.
Now, give or take, looking at today's stock price, you're able to buy about 10 shares of Xilinx. Now, assume that the deal closes today. This is going to garner 10 times 1.7234 AMD shares. So what's going to happen is if you had 10 stocks of Xilinx, then you are going to have 17.23 AMD shares at today's price, which implies 1,723, which is kind of interesting because I had $1,500 US, the deal closed, and now I have $1,723, which is actually a gain of about 14.5% to be precise, like 14.28%.
Yeah, that's exactly the inefficiency, right? So there is an opportunity that an investor invests and the deal closes, assume the deal closes soon, they make a cool 15% in a matter of a couple of months.
Wow.
Now let's try to understand why does this spread or this deviance occur. The spread between the deal conversion price and the Xilinx stock price continued to expand since mid-June and exploded around the time AMD posted its Q2 earnings around July 27th. There appears to be three reasons for the spread to increase. First, it seems likely that the concerns about China delaying Nvidia and ARM deal might have spooked market players. Second, it is possible that some of the arbitrages were looking for the deal to close in phase one, and the delay in the deal not closing in phase one caused some of them to exit. And third, money was not flowing into Xilinx stock at a comparable rate as to money flowing into AMD stock, causing the spread to widen or increase.
Alright, so now summary of the inefficiency. Here, the market actually believes that there are risks in going ahead with the deal. We've heard a lot of news into the potential that the deal might be cancelled. Second, the market also believes that if this deal goes through, then AMD shares will have a drag. Well, we know that share price of acquiring companies actually dip like 2-3%, specifically in an all-stock deal like this. But dropping 15% is something that we can easily say it's not going to happen. So scratch that away. That's not going to happen. If at all, it will be 2-3%.
Now, How can you, as an investor, benefit from this deal discount? From the analysis that we have conducted, it appears that the deal would likely close in a time frame of 2 weeks to about 3 months, depending on whether it enters a phase 3 of evaluation or not. Now, if we go with a pessimistic 3-month clearance, even assuming that the AMD stock stays static, an investment in Xilinx could yield about a 15% return.
We discussed earlier the spread between AMD and Xilinx could actually expand if AMD stocks appreciates considerably before close, and that actually presents investors with an even greater margin to play with. Now, as AMD's earnings are actually accelerating, there could be rapid revisions to the valuation.
The larger the discrepancy between AMD valuation and Xilinx valuation occurs closer to the closing of the deal, the higher the Xilinx discount could present, meaning you as a retail investor could stand to gain more than the 14.28% that we had calculated earlier.
Yeah, absolutely, Nidesh. So today when I look at Xilinx stocks, to the valuation, I see very little downside.
So this scenario is more likely if the deal gets delayed. As discussed previously, if the deal were to collapse, AMD stocks could explode and Xilinx stock could take a dive. And this is the primary risk in this investment. And due to these risks, any strategy that shorts AMD stock or options could be a really high risk one. To conclude, if you believe that the deal will not close and China will somehow scuttle this deal, then you should short Xilinx and go long on AMD. There is currently a deal drag on the AMD stock, and it could really explode if the deal collapses. However, we at Investor Diaries believe that the deal will close and it's only a matter of time. So in that case, there are two options. Now, there is a trading option where you can create a riskless bet by going long on the 58 Xilinx shares and shorting 100 AMD shares. What this would mean is when the deal closes, you will make the delta in the inefficiency, which we calculated around 14.28%. Now, there's a reason why we named this channel Investor Diaries and not Trading Diaries. So if you're a long-term investor, our recommendation is buy Xilinx, and after the deal closes, your Xilinx shares gets converted to AMD shares, and then it's upon you whether you want to keep holding on to your AMD stock or sell and then just make that 15% profit in a matter of either 2 weeks or 3 months.
So folks, we hope you actually liked this analysis that we did for Investor Diaries, and feel free to leave your comments in the section below. And as always, feel free to subscribe to this channel. It really helps us. Thank you.
Thanks everyone.